to our training video today. My name is David Miles. I am the Senior Options Coach for Cashroom Options. I'm also the owner of that company, and I've been trading options for about 28, 29 years. I've made money, I've lost money, I learned to do it on my own. Very expensive proposition. Maybe some of you are going through that right now. But eventually, and years ago, I established and created a unique strategy for trading the market that has been very, very profitable. I have one particular strategy that results in winning trades 90% of the time. So if you go from frustrated to ecstatic, you find something, you're going to put it into your trading strategy, it works, and you get crushed by the market. It's very, very discouraging. I established my company to offer coaching to people out there, traders out there that want to earn the profits they deserve. Fire your boss. I fired my boss many years ago. I work from home, work on the road, can work from the beach, whatever. I just trade options, and I do it for consistent cash flow, very short term in and out, and we create excellent returns. One problem with the market is trading the market is it's frankly difficult. 84%, give or take, of people that get into the market to trade with high hopes, they end up losing everything. Only 4% make 50% return on their account balance per year, only 4%. And those are the kind of returns I'm looking for. If I had 50%, I'd be a little disappointed. But we want big numbers. The stock market is risky, there's no guarantees, but if you have a proven, consistent strategy, you can beat the odds. How would you feel if you could look at your laptop or your computer as a little ATM machine? You know, an ATM machine, you go put money in, and then you take it out until it's gone. With this type of ATM machine, you put money into a stock trading account, and it grows if you're trading properly, if you're trading with knowledge. By the way, the biggest risk you will ever take in the market is lack of knowledge. Again, another reason I established my company. But you put your money into your stock account, it goes up, it compounds, then you can pull money out. Depends on how much money you open your account with, but you can pull money out every week, and your ATM balance or your account balance in your stock brokerage account continues to go up. Think of your computer as a little ATM machine. What we're going to do today is talk about 3 moving averages that all traders should use. I use these myself. It's part of my overall strategy. But let's open up a chart, and I will show you how consistent these can be. Here's a black line that I've superimposed on the chart itself. It is a 21-day moving average. Some people use 20-day. That works just as well. I use 21-day. I've used it for years. I like it. And that is a 21-day moving average. It averages the last closes for the last 21 days, and it puts a point on the chart. Every day it updates itself. This is a 21-day simple moving average. Now the red line here is a 8-day exponential moving average, and the blue line is a 4-day exponential moving average. This is important. These two averages here, the short-term averages, the 8-day and the 4-day, are exponential. The 21-day is simple. Let's look at the 21-day. The 21-day has a tendency, when the share prices are above it or the candlesticks are above the 21-day, it tends to act as support. You can see that right there. You can also see it there. When the stock prices or candlesticks are below the 21-day moving average, it tends to act as resistance. You can see here it came up. A lot of times the share price will come up to the 21-day and then hesitate a day or two and then move up, or it'll be rejected and come back down. But there's an example of the 21-day acting as resistance. Here's another one. And one thing you may want to incorporate into your trading, when I decide I want to make a long trade here, I won't take the trade. I won't buy call options until it moves above the 21-day moving average. Or if I want to buy put options here, I won't do it until it moves below the 21-day moving average. I'm pretty good price momentum. I want to move that's starting out nicely, like here and these 2 days here. So with that, let's look at the 8 and the 4-day exponential moving average. When the blue line or the short-term average is above the 8-day and comes down below it, that is a sell signal. That is an indication that the probability of a downtrend are higher than it moving up. And this one went down 3 days, and then it changed. When the blue line moves above the red line, or the short moving average moves above the long-term moving average, it is a buy signal. And you can see that was a good time to buy. You can see the 21-day acted as support. Here we get a sell signal. Blue line moves below the red line. And sometimes the moves are large, sometimes they're not so large. Here's a buy signal. Prices hesitate at the 21-day moving average, then they move up. Good time to establish calls. Another way this average acts as a buy or a sell signal, when the blue line comes down, we've had an uptrend, the blue line is above the red line, but when the blue line or the 4-day comes down, touches or comes near the red line or the longer average and then moves away again, that is a buy signal. This would have been a good time to enter the market. This would have been a great time to enter the market. And you can judge your entries on these short-term moving averages. Another thing the averages do, both of these averages, the 8-day and the 4-day, they tend to act as resistance when prices are below them, and they tend to act as support when prices are above them. You see that here, acting as support. Here you see it acting as resistance. When the 4-day is acting as resistance, that tells you you're in a really nice downtrend. Well, it's nice if you're on the if you're on the right side of it. It's not nice when you're on the wrong side of it. But this shows us that this is a nice little downtrend. Here the red line, or the longer moving average, acts as resistance. Here again, and down we go. Here the trend picks up again to the downside, very, very strong. What's this market going to do now? This is the 7th of December. We had a huge drop in the market the last couple of days. What's this market going to do now? Well, is it finding support down here? The blue line is starting to move up. Will it be rejected by the red line? Good question. We'll wait and see. Here's another chart. Again, demonstrates the 8-day moving average acting as support. Strong move, the 7-day will act as support when the candlesticks are above it. When they're below it, it tends to be just the opposite. When is a good time to join a strong downtrend? I tell my clients, don't try to catch a falling knife. Don't try to catch a falling piano. What if you catch this right here? Oh my gosh, this is going down, 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 down. Boom, I buy puts. Whoops. So when do you do that? You wait for these signals, these short-term signals on the 4 and the 8-day. Here it moved, the 4-day moved above the 8-day, giving a buy signal, but we don't want to enter this market with this 21-day acting as resistance potentially. When's a good time to enter the downtrend? When it gives another sell signal right there. Down we go. I also teach my clients when to take half your profits. When the market gives you a nice win, go ahead and take half your profits. And we have specific rules we follow that tells us when we wanna take profits. Here is a great time to establish a long position. We get a buy signal on the 4 and the 8-day. It rejected these 2 days. The price was rejected by the 21-day moving average and moved up here. Good time to buy calls. Now I have more indicators than just these moving averages. I use the 4 and the 8-day as secondary buy and sell signals, and I have other indicators that I use that give me a primary buy signal. And when the primary buy signal flashes and a secondary buy signal flashes, I'm ready to buy if prices move above the 21-day. When a primary sell signal day flashes and then a secondary sell signal flashes, I'm ready to go short when prices move below the 21-day moving average. Hopefully that's helpful. Let's take a look at my website here. And this is what I do for clients. Powerful stock options investment strategy that produces consistent profits on typically a weekly basis. If you'd like to receive my free trades, I send them out to your inbox every week. I send the trades that I made, what I did. I also send why I did it. Next to the trade, I'll give you my comments and why I made the trade or didn't make, or why I made the trade, how much money I made or lost. So I would recommend that you sign up for that. It's free. You can look over my shoulder and watch how I actually trade. We also have learn about our coaching programs. This is our trading strategy. You can learn about that, what I do with the market. Let me get that up. And it'll show you what I do. We also have a trading library, good articles, and I publish and I add different things to that, but good articles on how to trade. We'll have some videos placed there. But take advantage of that, and there's the address, cashfromoptions.com. Hopefully you found this useful today, and if you have, please like and share, and I will continue to put these out on a regular basis. I wish you the very best of luck in your trading, and hopefully we will speak soon. Good luck to y'all. Thanks.